everyone, you've tuned into ET now and this is Market Fatafat with me, Karunya Rao. But let's first track an important story that my colleague has been working on at times when banks are struggling with recovery. Good news for banks coming from Hotel Leela, as both SBI and HDFC Limited are getting full recovery on loans given to Hotel Leela. ET now has got exclusive details and contours of the deal as Hotel Leela announces closure of the deal with Canadian investor Brookfield. Rahul is joining in with more details. Rahul, fill us in.
Well, one of the biggest corporate battle of 2019 between Hotel Leela and ITC has finally come to an end because Hotel Leela has finally announced to close the deal with Brookfield. Well, let me tell you that ET now has got some exclusive detail of the contours of the deal, and according to this, both HDFC and SBI are getting zero haircut on their exposure in Hotel Leela. This is primarily because of Bangalore property which has been sold it's at a much more price, and HDFC and SBI both were having exposure in Hotel Leela Bangalore property. Now let me tell you that SBI will be getting 158 crore, HDFC will be getting 811 crore, and LIC, Bank of Baroda and JM Financial ARC will be getting 2,911 crore. Now this is primarily because we saw a very heated debate in NCLT and SAT between Hotel Leela and ITC, where ITC had challenged the entire deal of Brookfield in both NCLT and Securities Appellate Tribunal. Well, last month only Securities Appellate Tribunal cleared the deal of Brookfield with Hotel Leela, and this came as a relief for Hotel Leela, and Hotel Leela has now finally announced its deal with Brookfield, which is worth rupees 3,950 crore, and it is selling its 4 premium hotels, land parcel and brand name Hotel Leela. But the big relief is for bankers who are getting zero haircut on their exposure in Hotel Leela.
All right, Rahul, thank you so much for getting us those details. Definitely some positive news coming in for all the lenders who had given money to Hotel Leela. The deal is also almost going to be concluded as far as Hotel Leela is concerned. Okay, let's start off Market Fatafat, all the important stocks you need to keep on your radar. So we'll get you a comprehensive wrap of that through the course of the show. Joining us on the show today are Pranay as well as Varun from the research desk. Swati Hotkar of Nirmal Bang is also with us. Hi everyone, welcome on board. Pranay, I'll come to you first. Zee Entertainment held a con call yesterday. Their numbers also came out yesterday itself. Can you tell us what exactly are brokerages making of the commentary?
Well, the focus of brokerages, Karunya, is mostly on takeaways from the con call. For example, the negative operating cash flow in the first half of this year, which is expected to improve only towards the end. Also, that the auditors did not sign and approve the cash flow statement. It was only done by the board members, so that is still pending. If you look at some of the receivables, that has increased from the last quarter. And also there is a provision made towards an intercorporate deposit delay to the tune of about 170 crores. So they believe that maybe in 3 to 4 months time, perhaps the picture on these metrics will improve and the stock will only move up when we see more clarity on reduction in promoter debt or a stake sale. In absence of that, there won't be any drivers near term. The stock would remain volatile, and that's why the brokerages have a varied stance. For example, Morgan Stanley underweight with a target of 248. CLSA has a buy with target of 320 because of the valuations which are at 12 times earnings, and they believe that that is available at a nice 60% discount. But near term, everybody expects the stock to remain volatile, and also the results were a little softer than expected, which is why the stock is down about 7% right now.
Right, okay. Swati, I'll come to you next. Moving away from media to the space of construction and infrastructure, NBCC from the broader end of the market is really doing very, very well in today's session. It's up almost to 7.5–8%. Can you tell us whether this up move is likely to continue going forward?
See, Karunya, the overall trend of the NBCC is definitely a bearish. In this week, we have seen a very good bounce back rally from the low towards from 32, from almost from the level towards intraday on the basis 32 to 36 level. This week we have seen a gain of a 12% on this particular counter. Actually, the overall trend is down. We are just witnessing a pullback rally, and which might lead towards the 45 to 46 levels. I will not initiate any long positions at the current level because technically it is not showing any kind of a reversal signs from the lower levels as such. But definitely this is the sort of a pullback rally which likely to be continued towards 45-46 levels. So those who are having any long positions, they can definitely hold on. There is a cluster supports level at the 32-33 levels. So they can hold on a long positions with a stop loss of a 32 for an immediate target of a 46 to 45 levels on the high side.
Okay, so a whole call on NBCC with a target of 45 to 46 rupees. Okay, let's talk about a stock that has been in focus and very much on a tear, BHEL. It's higher by almost 28-29% as we speak, and of course this is an ET Now exclusive story which we broke as well. My colleague Ruchi will also be joining us to give us more insights into that. But yes, what we're picking up exclusively from sources at this juncture is that an interministerial group is going to consider stake sale in NMDC's Nagar plant. At the same time, the government is also considering a stake sale in BHEL. Cabinet Secretary-led core group will soon be considering this stake sale, and they may also look at retaining only 26% in the company in BHEL. That is, Ruchi is joining us on the phone line. Ruchi, what exactly are your sources suggesting at the juncture? The stock clearly is on a tear today on back of some developments on divestment front.
Absolutely. This is a story that we reported yesterday on ET Now. The government is pushing the pedal on its disinvestment drive. We're given to understand that today the interministerial group will be meeting to take a stock of NMDC's asset sale for the Nagarnar plant. Besides that, in interesting developments, we're given to understand that that BHEL is another candidate where the government is looking at strategic stake sale. I'm given to understand that the Cabinet Secretary-led core group on disinvestment will be meeting soon to take a call on that. The government currently has over 60% stake in BHEL, and they're looking to part with a significant management control, a significant stake, and retain perhaps only 26% with them. However, the timelines is something that we still don't know, but this is an important development in terms of BHEL.
All right, Ruchi, thanks much for joining us and telling us what exactly, how exactly are the developments likely to shape up with respect to the government's divestment strategy for not only BHEL but NMDC as well. Okay, moving on to stock number 4 then, Varun, Equitas. It's fairly cooled off from today's highest point. What exactly is the update we're tracking?
ESFB listing is what we've been tracking. Now, they were probed to do an ESFB listing post their request to do a reverse merger with the listed parent, which was denied by SEBI. So now, that's why the stock has actually come off considerably, because now it will have a HUDCO discount. So in the latest development, they've appointed the bankers. That's JM Financial, IIFL and Edelweiss Finance. And the IPO will be for 1,000 crores and it's expected to be completed by March 2020.
All right, that's Equitas for you. It's down 1.1% as we speak. Meanwhile, Pranay, InterGlobe Aviation, how exactly has been the passenger growth numbers? The stock clearly is looking very, very muted, but what's been the numbers delivered?
Well, Karuna, this time their passenger traffic growth was about 13% in August, and while that may look better than the 1% at the industry average level, it's their slowest pace of growth in the last 22 months. While they have managed to enhance their market share to 48.2% given the capacity addition that has been done, clearly the last or the recent quarter's passenger traffic growth is going to be subdued, which is why the stock is also trading lackluster today.
All right, okay. Let's move right on to another name from the broader end of the market. It's KPR Mills on back of buyback proposal. The stock is looking quite upbeat and cheery today. What essentially has happened is that KPR says that they've announced the buyback plan for as many as 37.5 lakh equity shares on April 30, and they have finally got SEBI's nod for this buyback. So they'll go ahead with this particular proposal to buy back the shares. Do remember, in July, the company withdrew the buyback plan, citing newly imposed 20% buyback tax obligations on such offerings. But now that they have a nod and a go-ahead from SEBI, they said that they will pretty much be on course with the buyback proposal that they had announced earlier. All right, Swati, let's talk about HUDCO, another name from the infrastructure construction space. How exactly do you see the stock perform given the historic trend?
See, Karunya, technically this particular counter doesn't look attractive on any parameters as such. If we look towards from the mid of 2017, the stock is continuously facing a strong resistance of 200-day moving average, and which is not able to surpass that level, which indicates a very negative sign on the technical terms as such. Even from now a few days, we are witnessing that the stock is facing a strong resistance of 50 days moving average, which comes to around 35 to 36 level. Today also it had touched the fit of the 50 DMA, but somehow it is facing a resistance levels on the higher side. So as of now, the overall view is negative on this particular counter. One should not go for any long positions at the CMP, or else if we are getting any small pullback rally towards 100 or 200 DMA, which might come straight around 45 to 46 level, one can take an exit on every rise. This kind of a strategy one should follow, that sell on rise strategy should be followed. At the current level, I am not suggesting any kind of a long or a short positions on this particular counter.
Okay, moving on then, let's also bring on board the stock of Yes Bank. Varun, the divergent move for the stocks continue, this time on the upside. What exactly is the trigger that's fueling the rally?
So there's a couple triggers, Karunya. The first was obviously the ET Now story, which we broke a couple days ago about, prominent business families interested in Yes Bank. Now, we're still to hear clarity on that and get a definitive statement from either of the families, which was the Mittal and Munjal family. Now, apart from that, what's recently happened is HUDCO is being restructured. Now, Yes Bank's exposure to the troubled entities around 500 crores. So that was priced into the downward action in Yes Bank stock. And now that the restructuring is happening, Yes might receive the dues pending from there. And as a result of that, the stock is recovering.
Okay, that's Yes Bank for you, up nearly 5.5% as we speak. Moving on to stock number 9 then, Pranay, United Spirits. Why exactly is this stock on our radar today?
Well, that's because its greatest peer, Pernod Ricard, has published its recent quarterly numbers, where it has seen subdued growth, and even the management, given the performance, has moderated their expectations for the year. Since Pernod Ricard has actually grown at twice the pace of United Spirits for the last 2 years, this comes as a leading indicator for what we might see for United Spirits in this quarter, and therefore it's the stock to watch.
All right, we will definitely keep an eye out on United Spirits in trade. But let's talk about big boy Reliance. It's going to be delivering its Q2 report card today. And right ahead of that, the company, in fact, the stock, I would say, the company has become the first Indian company to cross 9 lakh crore worth of market cap. And just ahead of its numbers, they managed to reach that milestone as well. Ajay is standing by with detailed preview. Ajay, tell us what exactly are the numbers looking like?
Well, Reliance Industries' second quarter showing could be a very healthy one. If you look at this quarter, the top line may look a little flattish because there are some certain number of shutdown days as well at the refinery, but the internals of the number will be very healthy. There's margin expansion, profitability growth will be quite good on a sequential basis. This is bulk of it is actually because refining is coming back. The refining margins are coming back closer to the $10 mark. After 4 quarters, we are looking at $9.5 number, which our own estimate suggests, because in Asia there is some amount of recovery as far as gross refining margins are concerned. So that will be doing a lot of heavy lifting. The petrochemical end of the business would be flattish this quarter. Pricing could be slightly on the downside, the product pricing, but volumes will be good, so it will make up for each other. And the consumer businesses is where the big action is. If you talk of Jio, there could be a minor dip as far as their average revenue per user is concerned, but volume growth is quite healthy. The subscription addition is very good, so that will take care of the growth over there. Even the retail end of the business, the profitability improvement will be very good. Volumes are good because of festive season outlook as well, and good expansion, store expansion. So consumer end of the businesses is something is watching out for, the street is watching out for closely. Apart from that, asset monetization guidance, which they have given 2 quarters back, what's the progress there? And what is the deleveraging plan from here on? How much will be from internal accruals and how much from asset sales is the kind of commentary the street would watch out for. But net expect a very healthy showing from Reliance Industries this quarter.
All right, thanks a lot, Ajay, for getting us a detailed preview of what exactly to be watched out for when it comes to Reliance delivery of its Reliance report card for Q2. Let's pull up the Rise with India small case index as well real quick to see how that's doing in today's trading session. The markets overall, the momentum and the mood is looking fairly upbeat, especially in the broader end of the markets. And okay, Rise with India small case index is also looking fairly upbeat, not soaring away in trade as such, but yes, up by about 0.4% at 555 as we speak. It's half time on Market Fatafat. Let's take a quick break. We'll come back with 10 more stocks to watch out for. All right, welcome back. We're still on Market Fatafat right here on ET now. Swati, let's talk about NALCO. Metals pack overall is also looking quite upbeat, and especially some stocks from the broader index. And NALCO is one of the biggest outperformers. It's up 8.5% at this juncture. How do you analyze its chart patterns, and what exactly do you project going forward?
See, Karunya, technically the stocks today has given a very strong rally of almost 8% on intraday basis. I believe 50 days moving average, which was coming at around 43 all levels today, it has given a breakout with a good decent volumes, I believe. Upside, I believe this rally is likely to be continued towards at least 47 to 48 rupees on a downsides. If we look towards the overall longer term trend from the last 2 years, this particular counter was not at all performing very well. But if we look towards 4-5 days history backs on the intraday basis or say on a weekly basis, this rally is likely to be extended towards 47 to 48 levels. Whereas on the downside, 41.50, 42 will act as a very strong support level. So those who are having any long positions, they can definitely hold on their buy calls or the long positions with a trailing stop loss of a 41.50. I believe probably within a 1 to 2 days we might get to see 47 to 48 rupees on an upside.
Okay, that's NALCO for you, up trading at the day's highest point at this juncture. Meanwhile, Varun, Metropolis ICICI Securities has initiated their coverage on this one. What exactly are they saying?
So there's a couple of things to look out for. The first is the unorganized versus the organized play. So there's very few organized players in this highly unorganized, underpenetrated diagnostic industry. The second thing to look out for is the strong presence Metropolis has in Western India and is gradually expanding to other regions. The third thing is they have a high focus on specialized testing. Specialized high-value tests account for 41% of the overall revenue. So that's really high compared to other peers. And these are the three main reasons. So they have an ad rating with a target price of 1,365 rupees per share.
All right, that's Metropolis for you, up a percent as we speak. Meanwhile, Pranay, L&T Technologies had come out with their numbers as well. How was the performance and more importantly, the commentary?
Well, they'll be coming out with the numbers today, and the expectation is that 3% constant currency growth should be the order for them. But Street will be watching for the traction in BFSI, healthcare, transport, and semiconductor verticals, where we have seen some of the peers seeing slowdown in spending from the clients. Importantly, analysts have been penciling that management will be maintaining their 12 to 14% revenue guidance growth. So whether that is retained or whether there is any change, those will be the things to watch.
Okay, I stand corrected, Pranay. Thanks much for that. That's L&T Technologies in focus right ahead of its numbers. Let's talk about NTPC as well. That's another stock that we're keeping on our radar today. CLSA has come out with a note on NTPC. They've maintained the buy rating. The target that they've given is 157 rupees. They believe that carbon is likely to drive double-digit YOY growth in regulated equity in FY20. NTPC strives to meet UN sustainability goals as well. And they hope to commercialize 1.32 gigawatts worth of carbon during FY20. The double-digit YOY growth in regulated equity also is likely to be primarily driven by that. So they're fairly bullish on the company, primarily on these key factors that they flagged off and which I just mentioned, maintaining a buy target at 157, NTPC higher by 1% right now. Swati, NCC, another name from the construction space which is buzzing in trade. Tell us, how do the prospects look for this one?
See, See, the overall NCC trend on the technical parameters is down, but from the last 2 days we are getting some good intraday pullback rally, and which is likely to be continued towards at least its 50 days moving average, which comes to at around 60 levels. And downside, whereas 50 is acting as a very strong supports level. So those who are looking any long positions, they can definitely build on at the current level as well. With a stop loss of a 50, I believe probably in a week or a 2 week we will get to see at least 60 levels on the upside.
Alright, NCC up and away in trade, up almost by 4% right now. Varun, what exactly was the performance by L&T Infotech? This is the one which is an earnings candidate which we're tracking. How was the performance?
So I'm going to walk you through the quarterly numbers. So the PAT was up a marginal 1.3% Q on Q to 360 versus 355. The revenue saw a 3.5% QOQ jump at 2,570 crores versus 2,480 crores. And the dollar revenue was up 363 million versus 357 million. EBIT was 399 crores versus 397 crores, and margins slightly compressed to 15.5% versus 16% Q on Q. So they also approved an acquisition during the quarter for 100% of PowerUp Cloud Tech for around $15 million. So the street seems to be responding positively to the result. The growth momentum and the margins have been maintained. So all in all, auguring well for the stock today.
Right, clearly reacting to the set of numbers delivered by the company, the stock is up 6.2%. Pranay, how was Science performance and what did the management say?
Well, its results were mostly in line with expectations, except for revenue that was a little above estimates. But it is seeing slowdown in quite a few verticals, namely aerospace and defense. And management believes that traction, even in telecom, while being decent, will take time to ramp up, particularly in 5G and IoT. So therefore, the outlook remains a little modest for the rest of the year. And valuations are the only thing which remain attractive at about sub 10 times current price, which is why you can see the stock is also trading rather subdued today.
Absolutely, the stock is definitely looking pretty somber as we speak. Swati, Pranay and Varun, thank you so much on that note for joining us and for helping our viewers understand which are the stocks to watch out for in trade today. But before we wrap up, every evening on ET Now, we get you Rise with India Prime Time from 5 p.m. to 7 p.m. Today on The Money Show, we get you a guide to identify the health co-op bank and avoid PMC-like cases on the Meet Your Fund Manager segment as well. Grab your dose of wealth creation portion from Franklin Templeton's Anand Radhakrishnan. Finally, in the last leg of the show, grab your healthy eating tips for this Diwali. After all, your well-being of your health is the biggest wealth.